Joining me now, Post 9, Ritholtz Wealth Management's Josh Brown. We'll get a quick comment from you before we broaden it out after a break. All right, what do we do?
Well, look, I think Jeff came on in November, and he was enthusiastic. And the only thing that's really changed from then until now is we had one of the best 3-month periods in the history of the stock market. We did plus 19%. And quite frankly, we've done that less than 20 times over the last 100 years. The problem for the recession case is that on 16 of those 17 occasions, not only did you not have stocks lower, but you had no recession. And in fact, the market was up an average of over 30% 1 year later. So I would have to hear the case for why this time would be different. If you think we had this $5 trillion rally in the stock market over the course of 90 days over absolutely nothing, that's a really interesting story, because that says to me everyone's wrong and the last people still calling for a recession are right. They might be, but there's very little evidence. Everyone is working. People's bills are being paid. The market seems fine. The economy seems fine. It certainly could change. And I think if we were going to interest rates of 6% to fight inflation, everyone would be singing a different tune. That's not what we're talking about. We're talking about the first cut moving from March to May. To me, it's a very big, no big deal.
Yeah, obviously a bit of a knee-jerk reaction in the market. You stay with me. I lied. We're not going to take a break. We're going to get right to the market zone. And joining us as well, SoFi's Liz Young and CNBC senior market commentator Mike Santoli. Liz, I turn to you. I'll ask you the same question that I asked Jeffrey. Does March really matter as long as we know cuts are coming?
Well, it matters today to the market because everybody seemed pretty sure that that's what was coming.
To the angry algos, maybe. But.
Right. Well, I think the other thing about it is that the idea of a cut in March, it was pretty quick, and it gave people this sense that we were sort of invincible because now cuts were on the table. They were going to start. They were going to backstop it. The put is alive again, and we wouldn't be able to go down because they're going to start cutting. So now we're sort of coming to reality of, all right, I think what he told us today was, you haven't been listening. I think Leisman was the one that pointed that out. You haven't been listening to what I've been saying. You haven't been reading the statements. I think he's been pretty clear from the jump, from the beginning of this hiking cycle, that they would rather stay too high for a little bit too long than cut too early. He has not changed his tune on that. The market continued to try to bully him into a different position. And today he said, I will not be bullied. We call the shots.
We're still going to have this debate, Michael, and I think, Jeffrey alluded to this as well, as to whether whenever that cut does come, that first one, which the chair himself called a highly consequential decision, is it going to come for the right or the wrong reasons?
Right.
Jeffrey's still looking for a recession in calendar year 24. Inflation continues to come down. What forces their hand, so to speak?
Well, nothing forces their hand. And I think the bull case is that they can be bringing rates down just based on their stated framework. Right? Their outlook from the last time they delivered it was they thought inflation was not going to be as low as it is right now, and they thought growth was going to be weaker. So that leaves them room. There's a lot of room in here. What I heard from him sounded like a guy who just kind of didn't have the votes in the room. He felt like maybe we got to wait a little longer. Let's prolong this. I think that's fine. I was saying last week, March to me is not make or break for the stock market, but there are enough people who think March is make or break that you have to clear them out of the market. Let them sell. Clean up the market. We're back to where we were at the beginning of last week in the S&P 500. We're well higher than we were when March was projected as an 80% possibility of a Fed rate cut. We're down below 40. So to me, yep, it's one less thing, I think, that gives you a little bit of a cushion psychologically. And yeah, the longer you wait, the more likely, perhaps, that you end up making a mistake. And you end up kind of twiddling your thumbs while the economy does buckle a bit. So we're going to know more. I don't think he was going to front run 6 or 7 weeks of growth and inflation numbers and say one way or the other whether it was happening. It was a surprise. He seemed to close the door on it a little more because probably that was the tone of the committee, of the meeting he just got out of.